Investors, welcome back to the channel where we are of course talking everything dividend investing. Now, if you're new here, I'm Ari, your go-to dividend investor here on YouTube, sharing all the economic insights that you're going to need to make more informed investment decisions, or the very stock ideas to help you scale a passive income dividend investment portfolio. As for today's video, I realized I haven't given you all a portfolio update in quite some time, so that's exactly what I have in store for you today, so you can see just how powerful dividend growth investing really is. Without further ado, let's dive right in. Now, before I break down all of my dividend income that I received in the month of May, I want to first update you on where my account stands as of this video. It's at $116,789.98 after one heck of a week with major tech companies really soaring to new heights and rallying the bulls. But I also want you to keep in mind that this rallying is likely not going to last. And let's face it, the debt ceiling deal fueled investor confidence, and given the Fed remains in their blackout period, the absence of all negative news only sparks more excitement. So I won't be too rattled should my account actually falter a bit later on this week or into next, but more on that in my next video. Today, we're going to stick to the dividend stocks that paid me dividends in May. Now, there were 7 in total, and because I don't want to waste your time, whereas you just listened to me ramble on about the dividend paychecks I received, I'm not only going to disclose how much each company paid me, but whether or not they're worth the add to your dividend stock watch list. With that, let's rewind back to the 1st of May, where 2 dividends came in. The first from Dividend Restaurants, ticker symbol DRI, which is a full-service restaurant operation company with a powerhouse of a restaurant portfolio, as they're behind some of the most reputable restaurant chains in America, from Olive Garden to Longhorn Steakhouse to the fancier Capital Grille and Eddie V's. Now, I don't think that Dividend Restaurant is currently a buy, as it's actually peaking here around $163 per share. That brings it up to nearly 20% year to date, along with their PE ratio hovering at 21. But I will say this, I certainly wish I bought more shares worth of Dividend way back when, because it's reliable and profitable. So hopefully another chance will come our way. But for now, owning 5 shares of Dividend Restaurants allowed me to receive $6.49, given their dividend yield is coming in at 2.95%. Moving right along to the second dividend paycheck, it came in from good old AT&T, ticker symbol T, which was and remains one of the largest telecommunications, media, and technology companies out there, which adds to its reliability. But in my opinion, it's really not going to be the golden nugget opportunity. I mean, I'm looking forward to selling out of my AT&T position within due time and at the right share price. But speaking of the share price, AT&T is currently trading for $15.67, which is off its peak of $20 per share earlier this year and down by 14% year to date with a negative PE here. Now, we did see some hedge funds actually adding to their AT&T position. We also have analysts who are quite bullish on this telecom player, expecting almost 50% worth of upside. But this is not a buy for me, and nonetheless, it's just going to be a sell at some point soon. But for now, here I am with 7 total shares, which allowed me to collect $2.02 thanks to their dividend yield coming in at 7.3%. Now, jumping to the 4th of the month, it may seem like quite a bit of a shocker for those of you who have been following my journey, but I actually sold out of this next stock once before and then made a nice chunk of profit, only to now rebuy it after the news of the collapse of the Chinese economy. Now, the stock is JD, as in JD.com, ticker symbol JD, which is like the Chinese Amazon, as it's an e-commerce company, and matter of fact, it's become the largest retailer in China. Now, hear me out. Markets in China have not been the same since COVID, and the insanely intense zero COVID policies have really beaten down the Chinese economy. Now, while the rest of the world has reopened, I think many of us forgot that China really remained on lockdown. And as of the last 48 hours, a recent report read that the Chinese exports were down 7.5%, meaning economic hardships are far from over. But I like JD, always have and still do for a Chinese investment, especially when I see the economic conditions have forced a 33% drop as JD plunged from $65 per share to its current share price of $37.75 per share, with the PE ratio hovering at 20. And moreover, we have very bullish analysts calling for over 50% worth of upside, with the share price rising to $56.80 in due time. Now, not to mention plenty of smart money moves being made into China at this time and right into JD.com. Now, you'll laugh, I only own 2 shares, but that's because I bought JD within my Roth IRA and only had the change for 2 shares. But I will sell for the small profit upon JD's recovery, and until then just enjoy their dividend, which allowed me to receive $1.24, given the JD dividend yield of 1.65%. Now before I get to my real estate payday, the 15th of the month, investors, if you're out there and enjoying this content, let me know by simply tapping on the thumbs up button, and I'll keep making more content just like this. And of course, be sure to also subscribe if you aren't already to catch every single video that comes out. Now with all of that out of the way, let's dive right into our monthly paying dividend stocks, both of which are real estate investment trusts, with the first being Stag Industrial, ticker symbol STAG, which focuses on industrial properties, and more specifically, warehouses across the United States, with their footprint in 41 states with a portfolio of 561 properties and growing. Of course, over the last few years, Stag Industrial has actually taken quite a bit of a hit given their within the warehouse space and supply and demand shifts impact the company, but the tenants like Amazon, FedEx, and several big name logistics companies keep Stag Industrial alive and well, which remains now a solid investment in my opinion. And a matter of fact, it has also experienced more than 13% worth of growth this year, as it's now trading for $36 per share, with analysts foreseeing only more upside, with the share price rising to $41 per share, making for another 13% worth of upside. Now, shareholders will be able to enjoy the monthly dividends with Stag Industrial as well, which if you own 29 shares like I do, you would now be able to collect on $3.66, given Stag's dividend yield coming in at 4.07%. Now, as for the second real estate investment trust, it's everyone's favorite monthly paying dividend stock, Realty Income, ticker symbol O, which is the largest net lease solutions REIT with over 12,000 properties that span across all 50 US states and well into the UK and Spain. Now, not to mention plenty of reliability with diversification when it comes to their 1,259 clients that range from Walmart to Home Depot, 7-Eleven, and FedEx. And as far as Realty Income share price, it's currently trading for $60 per share, inching its way down to the 52-week low mark of $53 per share, which I would feel more comfortable buying when it's at that low. But nonetheless, analysts remain bullish, with upside potential forecasted coming in around $68.81 per share. It's over 14% worth of upside. So some future profitability there, while you can also collect on the dividend like I do on a monthly basis. And as a shareholder of 103 total shares, I received $26.47 thanks to their dividend yield coming in at 4.98%. Next up on the 18th of the month, my never sell tech titan shelled out a hefty dividend my way. So let's talk about Apple, ticker symbol AAPL. Now, as I'm sure you are all very familiar with it, I won't go too far into detail with Apple, but here are my honest thoughts. It's currently overvalued. So for the love of God, do not be fooled into buying Apple right now. I mean, let's just take a look here at their share price peaking at $180 per share, whereas it was once trading for $125 or so per share at the onset of the year. That's 43+% worth of growth, which a lot of that growth has stemmed from this mini tech boom that we're currently in the midst of. Now, I'll never sell out of Apple, but I can tell you now, I am not a buyer of Apple at these prices with a current PE ratio of 30.5. And as much as their recent product launch of their latest VR headset was kind of a flop, at least will no longer be auto-corrected to duck. But also now don't be fooled, because who can doubt this tech titan? With more product launches to come, from the Apple Car to I'm sure more AI products to come, all protected by their must-have, most popular product, the iPhone line. Either way, at this time, I own 127 shares worth of Apple, which allowed me to receive $30.61, given their dividend yield of 0.52%. And last but not least, let's talk about a magnificent company, Starbucks, ticker symbol SBUX, which is the world's most beloved coffee house chain with over 33,000 stores in over 80 countries worldwide. Now, is it a buy right now? After it's come down from a peak of around $113 per share, I think not, as it's now trading for just under $100 at $98 per share with a PE ratio at 32.4. However, I can't really express how much it means to be invested in such a dominant industry-leading company that I can trust through the good times and bad, because let's face it, even though Starbucks isn't really making real coffee, they have their addicts, which at the end of the day, it means a lot of upside potential to be expected, almost 20% worth of it by top analysts. But as for me, I'm just gonna sit tight and enjoy all of the dividend cash flow for holding 20 shares, which allowed me to receive $10.77, thanks to all you Mocha Choco Latte lovers and the Starbucks dividend yield coming in at 2.08%. Now I'm also gonna add in the dividend income from simply holding cash within my Vanguard settlement fund, which only totaled $3.94. But as for the grand total, investors, I received $85.20, which is quite a hefty amount for doing absolutely nothing. And as we jump into the dividend tracker here, we can see just how powerful dividend investing really is, how it just works, allowing for a win month over month and year over year, remaining now right on track to smash through another annual dividend income record. However, I want to toss the ball out to all of you. Drop a comment down below with your dividend income that you received in May, and let me know if you're about to make any investment moves, or are you simply sitting tight as of this week. Of course, don't forget to tap on that thumbs up button and subscribe for more, or heck, just click on this video right here.